Beyond the headlines. This is World Insight.
On today's World Insight, China's own unique path to growth and development decoded. Amid rising global pressures and high stakes, how's the nation's alternative model shaping up? Answers in today's special, the joint session Chinese Economy Fully Emerged, presented by CGTN and the World Economic Forum. In today's panel, Dong-Chun Fang, the chairman of China UnionPay; Sandy Xu Ran, the chief executive officer of JD.com; Ju Min, a member of the Senior Expert Advisory Committee of the China Center for International Economic Exchanges; Eswar Prasad, a professor of Cornell University; and Carlson Tong, the chairman of the Hong Kong Exchanges and Clearing.
This is a joint session between the World Economic Forum annual meeting and CGTN, China Global Television Network. I'm Tian Wei, the moderator coming from CGTN. It's such a pleasure to see all of you here on the stage and off the stage with us. Our topic today, Chinese economy fully emerged, ? When we begin today's conversation, it is important that we reflect back a little bit, but not too far away. Just the year 2025, which has been marked globally by a tariff war by one largest economy of the world against the rest of the world. So how has China's economy survived this? And as a result of that, what have we learned about the characteristics of the Chinese economy so far? Dr. Zhu, go to you.
The big lesson we learned is we need to change our growth model. We cannot continue on real estate sector, local financing, infrastructure investments, exports. We need to move to a new growth model. I think this is a big lesson. So this year and the next 5 years, China will move into a very much a new growth model. Emphasize a few things. Number one, technology. Technology emphasize, of course, artificial intelligence is one. U.S. China is competing on the frontier, fundamental studies. U.S. is still lead. But in application, China in some way lead already. New technology started with quantum computing. It moved very fast. With different Americans still on the general purpose, but China is on the specific functions. Fusion energy is another big tech sectors. It go fast. China has a Tomahawk equipment from Russia around 50 years, but now move to the laser beam systems and very head with the U.S. fusion. The second issue is manufacturing, upgrading, move to the frontier. The third is domestic consumption. I think it's absolutely important. With trade war outside, you have to focus on domestic consumption. Service sector is a big issue. The fourth issue is China capital will go abroad. I think going abroad is a big thing in China. So for the whole world, I think the implication is really domestic market is going to open, and Chinese capital, particularly private sector capital, will go abroad.
Professor Prasad, how has China managed the landscape last year with the hunting knife of tariff, shall we say, on the head? And what does that say about the characteristics of the Chinese economy? What does that mean for everybody sitting here today?
The tariff wall that the U.S. has put up against China and many other countries, of course, has certainly led China to react by diversifying its exports. But as Dr. Zhu pointed out, one of the key aspects of growth over the last 4 or 5 years in the post-COVID period is the reliance on the old playbook of credit-financed investment growth, which has driven the economy. Now, investment is not necessarily a bad thing, but this is happening at a time when real estate investment and other aspects of private investment are not doing that well because of a lack of confidence in the economy. So this has largely been public investment, and not all of it is really profitable or very efficient. So it doesn't really address what Dr. Zhu pointed out the economy needs to be doing. So what China has done, because of the enormous imbalance building up in the domestic economy, is to diversify its exports, and it's been tremendously successful. Now, China, of course, is an exporting powerhouse, but the question is whether the world can really deal with the second largest economy in the world, needing it to pull it along rather than China, like after the global financial crisis, pulling the world along. So last year, as we know, China recorded a trade surplus of $1.2 trillion, and that is good for China at one level, and it shows how much China is able to power through with its exports, but it's a real problem, I think, both for China, because it shows how deep the structural imbalances are in China, but also it is a problem for the world economy. And I worry that between US tariffs and Chinese exports, we're going to see trade barriers rising up around the world.
You talk about how China's economy needs to be restructured. So consumption is crucial. I want to go to Ran first before we go to the banking sector to know more how the Chinese consumers are doing. So Ran, tell me, how are the policymakers, the private sector, the businesses community, how do these factors work together in terms of setting a landscape to encourage Chinese domestic consumption, given your perspective?
I think Dr. Zhu just had a point that the consumption was weak last year. I would say from our observation that, yes, we were facing challenges in domestic consumption as well. So thanks to the stimulus policy at the beginning of last year, especially the consumption products trading program, so that we really saw a noticeable growth momentum in the first half year of 2025. However, the momentum slowed down in the second half year. And I would say, based on current data, we are still facing short-term challenges in the near future for domestic consumption. Having said that, we believe there are still lots of things we could do to further enhance consumption. In the areas like service consumption, rural markets, and sustainable or green products. And also innovations really drive new consumption demands across all categories. Like Dr. Zhu just mentioned, that currently we see that products with AI capabilities are really generating new consumption trend, including AI robots, glasses, etc. So we can see that from the policy perspective, things are moving towards the right direction. So boosting consumption is the top priority for both the 5-year plan and the Central Economic Work Conference. And we can also see that the trading program will continue in 2026 to support daily spending. And we would, if we may, suggest the policymakers to further consider a few areas. One is that further relaxing restrictions on buying homes and cars in China. And then secondly, to roll out additional stimulus policies in categories with big ripple effect, like baby and mom products, healthcare products, and service consumption. So for JD, we are really investing, because we are in this industry, so we work very hard to drive consumption demand. And we invested heavily in R&D resources last year to help launch the trade-in program to make sure that the consumers, they can have smooth shopping experience when enjoy the benefit of the trade-in policy. And also we invested I think nearly 30 billion RMB in the rural market to really expand logistics infrastructure in towns and villages, so that the users there can enjoy faster and more reliable delivery services. And, we also invested in promotion, marketing, and also enhanced customer services for users in the lower tier markets. And finally, we have a pretty large user base, so we work with the brands, manufacturers to develop the C2M products so that they can easily catch or quickly catch the emerging trends of consumption.
From the payment perspective, Ran got it from one company's perspective, but you got the massive number. So what is really taking place in terms of the trends, Chinese domestic consumption? How is the policy and the business community really shaping the overall picture?
So Union Pay, we're also a clearing institution. As you mentioned that we have a lot of data. We have more than 1 billion transactions per day and 1 trillion RMB in terms of volume. So we are kind of like a barometer of the consumption in China. The Chinese government has been balancing consumption and exporting. Consumption contributes 53% of the GDP. So from our observation, we see several trends. First of all, in the past, we used to buy goods. We have surpluses in terms of goods, and now people are buying purely goods. It has been a shift to buying services. Generation Z, they're no longer buying luxury brands. They want more customized experience. They like more niche brands. That's why some Chinese companies, Chinese brands, they use AI to extract the market insight, market intelligence, to provide customized products, customized services. And as we mentioned, everything has to be fast. There's another trend. Consumption pattern has been matured, whereas middle-sized or smaller-sized cities, from our data, we can see that growth actually comes from these rural areas, smaller cities. We thought that luxury consumption happens only in big cities. Actually, it's not really the case. In rural areas, there are also this offering of high-end brands and high-end services. So from these trends, we can see that China is rebalancing at this moment. The government and the regulation authority, they are promoting this shift. So we're based in Shanghai. The Shanghai government, they really try to promote consumption in all areas, in healthcare, in education, not only for locals, but also for foreigners, in which UnionPay, we offer a lot of data for insight. So this is only exemption in Shanghai. In other cities, they have their way of promoting domestic consumption.
Carlson, go to you.
Right, Tian.
How is the capital market reading, the signs coming from China's domestic consumption and this apparent transformation we're talking about?
Thank you for your question. If I may share with you an overview of the capital market in Hong Kong. Because Hong Kong connect China New Growth Agent with global capital. And by channeling the investment into high-tech manufacturing, into green energy transition and emerging market, and also connect Chinese mainland investors into the global capital market through Hong Kong. Just under 2,400 companies listed on Hong Kong Stock Exchange. About 65% of them are Chinese enterprises, and they account for between 70 to 80% of the market cap of all the companies listed on Hong Kong Stock Exchange, which is about $6 trillion. So you can see, in fact, Chinese companies play a very major part on the Hong Kong stock market. And also through the Connect scheme, which was established 10 years ago, it enables overseas investors to invest through Hong Kong into the Shanghai and Shenzhen stock market. They call it the A shares. And also enable Chinese mainland investors through Hong Kong to invest in global stocks. Through ETF, you can have global stocks. So Hong Kong connect China, Chinese mainland, with the rest of the world. That's very important. Now, 18 months ago, if you remember reading newspaper, they say China and Hong Kong is uninvestable, if you remember. Now, if you look back in 2025, it was transformational. A year ago when I was here, I couldn't believe that market would experience. Give you some example. Hong Kong stock market is ranked number 1 in IPO fundraising. We raised $36 billion, number 1 in the world. We listed 119 companies. 2/3 of them are Chinese new economy companies in biotech, pharmaceutical, high-tech. And in terms of turnover, you need turnover to stimulate the market, right? Without turnover, it doesn't work. And the turnover is $33 billion, and that is double what it was 2024. Now, in fact, now, if you look into 2026, we're at present handling over 350 IPO listings. It's record high. In January alone, we received 49 listing applications. I mean, this is amazing. I think the tariff, geopolitics, the volatility, uncertainty actually drives global investors to diversify the investment portfolio into gold and also in the other parts of the world, in Asia, and also, of course, Hong Kong and China. So in fact, Hong Kong benefited from this volatility, and it's been the stock market reflected it.
AI plus, as Dr. Zhu earlier mentioned, is one of the driving force. So let me go to Ram. Platform like yours, how you can also take advantage of that, but at the same time be able to feed back what is needed.
Yeah, so maybe let me elaborate from two aspects. One is on the consumption related to AI products, and second is on the application in our internal workflow. On the consumption side, really 2025 was a breakout year for AI products. So I can share some very interesting data on our platform. On the sales side, for any products with a keyword in their product name or product description of smart, so we saw the sales doubled in 2025 compared to the same period last year. And also for the products with real AI capabilities like robots and glasses, their sales grew by 3 and 10 times respectively. However, really the sales of robots were limited by supply, otherwise the growth will be even stronger. And the search data was even more dramatic. So we saw search volume for all AI-related products skyrocket by 100 times in 2025. And also we did a customer survey related to their interest in AI products. Nearly 50% of the customers told us that AI is a must-have function. So all these tell us that there is a clear consumption trend for AI-related products. And AI function was no longer a nice-to-have feature. It's a must-have core product value to drive consumption and growth in the retail industry. So with this trend, we were working closely with our business partners to co-develop products and meet the consumers' demands. So recently, we just launched our private label AI toy backed by large language models. And also, we work very closely with home appliance and electronic products manufacturers, to enable the AI features. And then on the application side, utilizing all kinds of agents to help us generate additional sales. For example, the AI shopping agents, and we are testing our AI shopping app. AI agents is really everywhere nowadays, coding, customer services, marketing, advertising. So it's developing so fast, it's actually changing every day.
Carlson, you can tell us, what are the investors? I mean, when we talk about AI, there's, of course, talks about overheating and this and that, bubble and early stage or not. But on the other hand, the mood of the investors is for real.
Yeah.
So not only AI, but also other innovations such as clean energy and some of the areas Dr. Zhu also mentioned about the new innovation. Do you see investors' enthusiasm is durable, or it is only quick money coming in, coming out?
Yes. Now, in fact, it's interesting. The innovation in clean energy and AI, especially in AI integration, is attracting a lot of interest in the capital market. Obviously, there's increased funding from private equity, venture capital, into AI integration and clean energy businesses. And also on the IPO platform, we're seeing a lot of AI and clean energy coming to list. And for example, for this year, we listed 2 very major large language model companies from China. One is Minimax, that one is Zhipu. It's very, very successful IPO. But I think we do need to be careful in distinguishing long-term sustainability to immediate popularity and trend and fashion. I think because you need the market to validate it, so you need to watch long-term. Do they generate revenue? I mean, that's very important. And also, do they have patents, for example? Can they get patents? Is that technical longevity? And how about the financial performance? Are they generating revenue, profit?
Right.
Have they got long-term contracts? I think we've got to watch all this to distinguish between the real McCoy, the real ones, and those who are just catching the fashion, because otherwise you can see the market chasing AI. But you do need to, for those investors who can separate between the 2 types, will be the one that will benefit in the future.
There are worries that the world will be divided into separate systems.
Yeah.
We are already seeing emergence of that. Do you see investors are also divided in their choices, or they're rather having a full portfolio of all the exposures?
I mean, I've been listening...
Very briefly from you, and then we go to the others.
I've been listening to various AI speakers the last couple of days. Very, very interesting. And I think it is about the sovereignty of AI, the large language model. I mean, do you have a universal large language model incorporating data from all over the world? Or I'm getting feeling that, even the European Union, they should have their own AI, they should have their own large language model. So I think there could be some separation that different countries might create their own large language model.
Yeah.
I think that could be the future trend. I don't know. I mean, obviously, it is still early days to decide what is the long-term future of AI.
We only have very limited minutes for such a big topic today. So, Dr. Zhu, I want to come back to you about China and the global economy. The complexity of geopolitics and geoeconomics, ladies and gentlemen, I don't have to explain here. I mean, you are dealing with on a minute basis. But Dr. Zhu, how is China calmly observing what is going on every day and carefully chooses its own approach with others as we speak?
Well, I just mentioned when I opened the talk, I think China realized, you cannot depend on real estate exports and credit increases, as you mentioned. You have to move to your own solid foot. That's a domestic market. So everything's focused on domestic market, technology, manufacturing, consumption, and all focus on domestic market. I think this is the most important thing. China is very serious on consumption. Many people mention on that. Because we have no choice, right? Given the very volatile external international environment, so you got to boost the domestic consumption, make sure your growth is based on your own foot. So China this year made this very clear. The policies say the consumption growth was stronger than GDP growth. That's a KPI. You consume more, need money. So income growth will be higher than GDP growth. That's the KPI. Budget will spend more portion of money to support the consumption and the social program, including education, healthcare, pension, all those things, and including subsidy on consumption, 15% on your purchase of durable goods.
Yeah.
So this is a very seriously move into domestic consumption within 1 foot. The technology is the second foot, as I mentioned, everybody mentioned that China is moving very, very fast. Not only AI, just as a quantum computing, nuclear fusion, and physics AR, that's the future. And the third leg is further improve the manufacturing and then combine them with artificial intelligence technology. So Chinese manufacturing in the past 45 years, the first 20 years, made in China is cheap. The second 20 years, made China is cheap and good. So next 20 years is make China cheap, good, and high-tech.
Professor Prasad, you want to briefly respond? 1 minute if you can, sir.
It's a time of tremendous opportunity, I think, for the Chinese economy and for the Chinese currency. There is a desperate desire in the rest of the world outside the US to diversify away from the dollar. China is becoming and has become a major power both in terms of GDP and in terms of global trade. So it would be logical and natural that the renminbi plays a bigger role in international finance and as a reserve currency. But China needs to do certain things. You spoke about the infrastructure. There is the technical infrastructure of currency trading, but also the regulatory infrastructure that needs to inspire the trust of foreign investors. But in addition, there are some key attributes that the reserve currency needs to satisfy: the fact that the value of the currency is largely determined by the markets rather than controlled by the central bank, and that you have a much more open capital account so that capital can both come in and come out relatively freely. And there have been a number of measures through the Connect schemes and so on to open up the Chinese economy. But the question is whether the belief of both domestic and foreign investors that these are durable measures so that the Chinese economy will remain open in terms of the capital account, that's the key issue. So I think it can happen, but it will take some work in terms of policies.
Go to you, Mr. Dong, on that too. I mean, how do you see, since you are working in the payment industry, that's so much related, how do you see China is looking at this role more integrated with the rest of the world? It is not China become part of the world. Now we are part of the world. It's about what is the next stage and what is the end goal here?
从支付的角度来看呢，因为支付是天然的这个人们之间商务
From a payment perspective, buying and paying is a very natural interaction between humans. For the last few years, we've been applying international standards in UnionPay. Now we have interoperationality with other digital wallets in other countries, more than in 50 markets. So this is a parallel system to our UnionPay system. So this is what we're doing when it comes to internationalization. So this is our effort in this front.
What do you think, this general question, China with the world when it comes to integration, innovation, and further growth? Ran.
So from our perspective, we're really building a global supply chain that could, facilitate transactions both ways. So not just one way. So we do have some program to introduce the high quality global brands products to the Chinese consumers. So that we can create value for the entire industry, society.
I want to thank so much the panelists sitting on the stage with us. I mean, all of you have rich resources to share with all of us, and you try to be concise and precise. I really appreciate it. Thank you so much. And all of you, thank you.